Hello to today's online discussion about the future of technology and operations in finance. My name is James D. Biasio, and I'll be your host and moderator today. I'm the founder and editor of DigFin, a Hong Kong-based media covering digital finance and fintech, and you can see all of our content for free at www.digfingroup.com. So, welcome. Digital transformation has been a growing priority for most financial institutions for several years now. But COVID-19 and this pandemic has been accelerating those plans. Now, I'm sure that people in the audience understand this in principle, but how exactly have firms managed through this crisis? And what impact is it having on their operations and their technology strategy? So to discuss this, we have assembled some very talented, experienced people from different parts of the industry in Asia. So I'll introduce them very briefly here before we get into the discussion. We've got with us Larissa Dunn, who is Chief Operating Officer of Engineering for Asia Pacific at Goldman Sachs. Stacy Lacey, Managing Director and Head of Operations and Technology for Asia Pacific at Citi Private Bank. Olivier Dang, Global COO of the Wholesale Digital Office at Nomura, and Alan Jones, Business Solutions Director for Asia Pacific at SmartStream Technologies. So welcome. Thank you for joining us today. The most important guest today, of course, is you, the audience. And you will see at the bottom of your screen a tab that says Q&A. So this will be your chance to ask a question to a panelist over the course of this hour, and I'll be moderating those questions, so please fire away and we'll do our best to get to all of them. I'm also a believer in audience engagement, so to break the ice, we're going to have a poll just to get you guys going, which I'm going to be putting up. And while I'm putting that together, and you can respond to that, I'm going to invite one of our two co-organizers for today's event. This is a tri-party affair between DigFin, ASIFMA, and SmartStream. So I'd like to welcome Laurence Vanderloo from ASIFMA to say a quick word. So Laurence?
Thank you, James. Thanks very much. So good afternoon, everyone. So I'm Laurence, and I'm Director Tech and Ops at ASIFMA. ASIFMA is the region's leading capital markets trade association, and we're very excited to work with SmartStream and DigFin today on this webinar on the future of tech in banking and capital markets. This is actually the second webinar in a wider series that we will be putting together at ASIFMA over the next couple of months. After the polling question, Jamie, it would be great if you could turn to slide 3, where we will provide more info on the upcoming webinars that we at ASIFMA are putting together. After this one, we have one on the 22nd of May on the soaring of Asian credits, and then a wider panel on the 28th of May on COVID-19 and what the new normal will look like going forward. We're very much open for speaker and topic suggestions. We really want this webinar series to address the key concerns that you are grappling with every day as we're going all through these challenging times. So very delighted to co-host this panel today. As you will have seen, you're in for a treat. We have a great lineup of speakers. So without further ado, James, I'll just hand over to you to kickstart the discussion. I see we now have the slides on of our virtual events up on the screen. So if you have a second, just go click on follow the QR code, and you will see more information on our website. But I'll turn over to you now, Jamie.
Okay, thank you, Laurence. So sorry, I don't see the poll slide. So if the CAT support could just make sure those get up on screen, I appreciate it. Why don't we get into the discussion until I can see the results of the poll. I'm going to start with, I guess, the broadest area of responsibility. Stacy Lacey, you cover many aspects of technology and operations at Citi. Tell us a little bit about the way that large institutions have been able to cope with the surge in volumes, and what we're learning about the resiliency of banks and financial institutions right now.
Thank you for having me, Jim, and it's a pleasure to be here. It has been an incredible 2 months for Citi, especially for our private bank clients, especially in the month of March. The volatility in the markets actually created a lot of volumes. And some of the things that we have done on the technology side was to making sure that every day our system stability is the foremost important thing. And so we put in measure to make sure that we're monitoring those stability on a 24/7 basis. The second thing was about anticipation. We knew that we had to get a lot of population across the region onto working from home, and our infrastructure team was able to anticipate that from a network consumption perspective, allowing our colleagues to be able to do so. And I think that actually really supported us in order to allow our both processing staff as well as our frontline customer-facing staff colleagues to be able to still stay in touch with our clients. So very quickly, our bankers were able to still connect with the clients through our video channels, through our audio channels, in order to facilitate their financial needs. It has been an incredible 8 weeks. We are starting to see the new normal returning to the volumes as well as the conversations. However, the need for our clients to have shorter but more impactful advisory is something that we have seen happening now for our private bank clients.
And what is going to be the way this is changing your priorities? What do you need to look at in terms of how you're going to be able to continue this if we're going to be in an extended state of dislocation because of the virus?
Yeah, so in the past, obviously, face-to-face interaction was one of the most important, engagement and interaction that we had with our clients. Because of the prolonged social distancing, as well as the way we're going to gather across the market, what we're already introducing is the virtual connect, whether that's through a smaller group or a webinar that is going to be a much shorter half an hour, because there's just a lot less attention span than sitting through a 2-3 hours sort of discussion, in a hotel ballroom. And we're seeing that that's what we're creating. We're also doing quite a lot of quick calls with our clients so that, there are thematic items that we're seeing and our clients are interested, and then we will talk through that with them, and all of them are recorded so that the client is at their fingertips to get access to it. However, what we do see, though, is that the interaction with the clients continues unchanged, if not actually intensified, because they are looking for that voice of reasons to know and think about what they want to do next.
Okay, great. I think our audience should be able to see on screen now some of the results from that first question that we asked people. And so we asked them, what will be your firm's top priority for investing in technology? And the two biggest responses, resiliency and business continuity, which got about 4 out of 10. And almost the same amount said next-gen platform for banking, capital markets, wealth management. So it seems that there's a big split between those who think that the big investment technology will be on the resilience side and those that are looking to create the next generation platform side. Perhaps these are not mutually exclusive things. I think that's sort of interesting to think about. Compliance and regulation, only about 10%. And that's, I'm sure a year ago, that would have been a very different response. And very little for data. And less for outsourcing, but we can get into some of those later. So I'd like to ask Larissa, maybe you can just give us before I ask you something a little more in depth about what you guys are doing. What's your feedback on the way that the audience has responded to that initial poll?
I'm certainly not surprised. I think given the market volatility, the dislocation of people needing to work from home, resiliency is just a huge factor. And I'm sure it's something that most of the larger banks are already focused on, like ourselves. But, I think as we think about, especially in the operations and the engineering spaces, it's been a huge focus for all of us.
Tell us a little bit about how do you get a capital markets operation to be distributed through people's homes? The hardware, the compliance, the security, and in such a short space of time in so many locations, how has that even, it's kind of mind-boggling.
It certainly is. I mean, as our COO keeps on saying, to think of Goldman Sachs being, 95 to 98% globally working from home is mind-blowing if you think back to the start of January and if someone had told us that. The firm has always been very supportive of flexibility, so I would say that most people globally have tried and tested working from home, on the odd occasion, certainly not on a more permanent basis for the majority. However, I think recently our CTO gave an interview where he said that our firm and our engineering division, particularly our workplace engineering business units, we did resemble a logistics company. We were procuring supplies. My job turned into part project manager, trying to coordinate across all the divisions. What did people need? How did we ensure that trading, sales, all the people in our revenue divisions can keep executing business? How do we keep providing service to our clients in a seamless fashion? To echo what Stacey was saying, it's been an intense couple of months. However, the nimbleness in which we acted just enabled this for us.
Great. I'd like to ask Olivier Dang, because your role is really more on the innovation side, how you move your digital experiences forward at Nomura. So the other half of that survey, Olivier, was talking about looking at next-gen platforms. What's is there a mutually exclusive or not when it comes to resiliency versus innovation? And at the digital office that you're helping run, how do you guys see that? Is it a tension or do they go hand in hand?
Thanks, Jen. Very happy to be here. They of course both go hand in hand. I mean, there's no point having a next generation platform if that next platform is not resilient and cannot support the kind of work from home. And I think a lot of the approach now is to build the next generation that is supporting remote working arrangements. So that includes, how you design it, how you code the infrastructure to make sure that it can operate from multiple kind of setup, whether at home or BCP site or obviously in the office. But I think it's interesting that almost 40% of the audience is also focusing on the next generation platform. I think for us, one of the key learning from the COVID crisis is not only the increasing volume that we saw across the businesses, but how that volume has increasingly shifted to electronic platform. And there is no doubt for us that that trend of electronification across capital market will continue to accelerate. And with that comes the need for more data processing capabilities, more analytics, and more ability to react extremely quickly to the changing market needs. So for us, that next generation platform has to be something that is not only resilient and able to support people working from home, but of course, dealing with the electronification that is coming with that. And I think it's not just in capital market. I think we see more and more that physical contacts are going to be something that is not necessarily something that people want to focus on. So digital money, digital assets, I think are going to accelerate and become more prevalent. And with that comes the need to be able to process more data, more information, and definitely need for AI, NLP capabilities. All those things will continue to accelerate as we move into the new normal.
Yeah. And Olivier, do you see some of these new next gen, you're talking about whether it's digital assets or use of AI and data, do you see these as turning into kind of hygiene vanilla? I have to have these just to operate, or is there still revenue opportunities, potentially very interesting revenue opportunities for firms that take the lead in some of these new technologies?
I think in data analytics, AI, that's almost becoming a hygiene need. I mean, if you don't have those tools already up and running in some of your highly electronified businesses, I mean, it's going to be difficult to maintain some market share and the reactivity that you need in order to support the client demand. Not to say that voice has completely disappeared, but by no means, and especially, in high volatility markets, we see OTC trade and voice still being quite important. But I think AI and ability to auto-price, auto-quote, segment your clients live with kind of real-time data is going to be something that most of the firms are deploying or will deploy in the short term. I think when it comes to digital assets and maybe crypto assets, we see probably here still more opportunities to generate revenues. I think it still operates a bit as a smaller niche in the traditional financial service industry. And for early mover firms, I think there are opportunities still to generate revenue opportunities. Absolutely.
Okay, great. Thank you, Olivier. And then our final panelist today is Alan Jones. Alan, I don't know if you were able to dial in, but you're from SmartStream, and thanks for joining us today. What do you see happening with the clients in the financial services space that you work for? Because you provide a lot in the efficiency side, the operations side. You provide AI and different automated solutions for a whole range of difficult processes, from corporate actions processing to reconciliation and so on. Where has been the most, I guess, activity in the past couple of months for you and for your clients? Tell us a little bit about what you see happening.
Yeah, hi James, can you hear me?
Yep.
Excellent. Okay. Yeah, thanks for that. And hello, everybody. Very pleased to be joining the panel discussion today. As Jane mentioned, here at SmartStream, we work in a number of different areas supporting the financial services industry with regards to reconciliations, corporate actions, cash management, processing, and alike. I think the key trends that we're seeing, certainly in the main spaces that we play in reconciliations, in corporation processing and the like, is the adoption of additional processing against the international standards, the working groups that have been really driving data standards into the marketplace over the years with SMPG, the National Market Practice Groups, the adoption of those data standards to further enhance the levels of automation that can be achieved. With regards to levels of automation, adopting new systems and leading-edge systems can now adopt also the AI and machine learning technologies that can further enhance the levels of automation that can be achieved, the levels of straight-through processing in those complex operational areas. So I think the benefits that are really coming to the fore are from years and years of investment into standardization. Standardization at the end of the day facilitates automation. And the journey that clients continue on, as highlighted or really intensified with this pandemic situation that we're currently faced, is the ability to add automation and those central repositories for processing across all of those different operational environments to ensure that the operational process flow is as automated and as controlled as possible. I think the key things we're seeing is further strives for automation of operational processes that have traditionally been very manual and paper-based.
Okay. And I'd like to maybe ask Stacy, could you talk a little bit about, because some of those issues that Alan touched on around taking things that are still manual, finding ways to standardize and automate, is that still the priority? Is that accelerating, or are you dealing with other issues right now?
So it's twofold, right? From a client perspective, we see that the clients are demanding to actually use our digital platforms to have the execution capability. So that way, it is already quite straight through, when the trades do come through the digital platforms. And that's something that I think has accelerated. And there is both a demand and supply increase, just wanting to do it much faster. And so, in fact, our, market managers are the one that's demanding something that could be coming in, next few months. They're like, can I have it tomorrow? So that's one aspect. From the operational side, the fact that we are all working from home across different markets in the region it's almost as if overnight we had to take paper away from our colleagues. And so therefore, that sudden now demand to actually replace that, rather quickly, and whether that's through process reengineering or automation, has really accelerated. We've been doing a lot of work to create scale to serve our private bank clients. And I've seen that in the last 8 weeks, we probably have done, a lot of work that was worth, the last 3 years of our efforts. So I do see that in the next sort of 18 and 24 months, we're going to continue on to do that, allowing more automation to come through for our more complex products and not just the simple, execution capabilities.
Yeah. And if you look forward then, because, this crisis has forced the industry to go so fast, so quickly with a lot of things that it's been doing, but they haven't been priorities. What do you think in your case, you support the private banking efforts in the region. What will this mean ultimately for your clients and for the business itself? I mean, if these trends continue at this pace, what one or two things could you imagine what private banking will be like as a result?
I think the private banking clients will actually be more informed very quickly on a real-time basis, making even better informed decisions and quicker decisions as they think about their wealth, as they plan their wealth for themselves, as well as, for the wider, reach from a horizons perspective. I think that digital platforms was something that the private bank space has already started to adopt, whether it's within Citi or, across our friendly competitors as well. I think that acceleration just, helps our clients to want to do that across the spectrum rather than just one, niche set of clients, which are the aspiring, entrepreneurs, at a certain age group. We're now hitting across, all age group, wanting to have that, digital at their fingertips, information at their hand to make decisions.
Yeah. Okay. And another issue I guess this raises is that traditionally financial institutions, and like broad brushstroke here, like to build their own stuff, and they like to keep it all in-house, and they do so for a variety of reasons. And I'd like to ask, maybe Larissa, you could tell us a little bit about what is a change, if there is a change, in the way that large firms look at decisions around partnerships, outsourcing, whether it's with vendors to support them with their needs, or if it's to find fintechs or someone else to work with. How has this crisis had an impact on the way that you view those kind of external relationships?
I think if we looked at engineering and Goldman more broadly, 2 or 3 years ago, historically we had always built, or most of the time we had built internally, and it was just the way the mindset at the time, and that has led to an incredibly complex engineering landscape internally across various silos. In the past few years, there's really been a mind shift to look, build versus buy. And so the attitude slowly has been changing across the firm. Now, we're at a point, and this was pre the crisis, I would say, that we now, as we look at our digital transformation and our broader 1GS strategy, we now look outside the firm before we start building internally. And that just doesn't mean we're buying off the shelf new solutions for everything. It could be open source. It could be, as you say, vendor solutions. It could be partnerships. It could be strategic investments that we bring in-house. But really, everything that we're trying to build and everything that we're trying to uplift and innovate in, we definitely look outside now.
Right. Okay. And is there a track record or a hit rate in terms of what works and what doesn't when you do look outside?
No, I'd say I think every business case is very specific. We could do something in a partnership. We could have a managed solution as we have in some countries. I think we really look at things on a case by case basis. I can't say that there's thematics, and to your point earlier, fintechs in the past couple of years really have been up and coming as new partners as we look at solutions. also, as I think about, if I bring this back to, the region and operations, some of the business intelligence tools and, a lot of the licensing that we do, there is a lot that we take from outside.
Yeah. Since we're talking about operations, we were talking with Alan earlier about some of the more detailed work, what's getting automated. It sounds like a lot is getting automated now. Are there still areas that are still manual that you are going to be addressing now? I mean, kind of what's the final frontier when it comes to using technology in back and middle office?
I think for us, look, it's been a focus for many years to automate more in operations, to upskill the operations professionals so they add more value in delivering, to clients, enabling business and reducing risk. That doesn't happen overnight, and it's still a very large focus. If I think about what we're doing in Singapore, which is where our operations and our operations engineering hub location is, Goldman, along with other financial institutions, is partnering with the Singapore government. And what we're in the early stages of doing is setting up an innovation center of excellence. And that's predominantly between operations and engineering, where we're taking ops processes and automating them. So an example is, at the moment in Prod Parallel, we have a broker reconciliation, one particular desk. Now this takes away the tick and tie back of that manual process. The broker reconciliation is uploaded into our systems, and it reduces the manual touch points. It allows for an audit trail of validation through these RPAs. And so while we've made progress, there still is a lot to do.
Okay, thank you. I'm going to get to a few audience questions now. So please continue to ask questions to the panelists. We've got a few in, and I'm happy to see that the questions are sort of getting scattered amongst our different speakers. So I think everyone will have a chance to answer one of these. Alan, I think you're probably the best for this one. Talk about ISO 222 adoption across financial market infrastructure, and will this catalyze exploration or use of different technologies, AI, blockchain, et cetera? Can you talk a little bit about ISO 222?
Yeah, absolutely. The journey from 15022 to 20022 in the ISO data standards has been ongoing, as most people would be aware, for many years now. It depends on the different spaces that we're talking about in the operational and mid and back office areas. If we're talking about payments, that's much more advanced in terms of the adoption of 20022, the enhanced messaging capability and capabilities that those extended message standards provide the industry to adopt further levels of automation, further information flowing through in terms of managing the payments, managing the status of paid payments and different initiatives that SWIFT have adopted, for example. If we move over to a more complex area such as corporate action processing, that seems to be dragging behind a little bit. There's been a number of different initiatives to adopt 20022 messaging formats and the extensions that message format provides to produce and disseminate corporate action event detail through the marketplace, and the different participants that need to be updated and advised of corporate action data. But that's been a slower adopter, as I said. There's many different exchanges that have adopted that standard and are pushing it into the market or making it available at least. Some of the bigger organizations across the globe have also adopted it. But there's always a big project or big price ticket associated to any data transformation project that a financial institution will take on. Many of the smaller, middle-sized organizations have just got themselves up to 15022 and stabilized on that messaging standard, and then to adopt a new messaging standard and the technology, the ETL tools or whatever that may be, to take in different messaging standards is a big ask in that operational environment. So I think it's something that's going to be continuing as we move forward. Certainly as we see enforcement on the marketplace to actually move away from 15022 and truly adopt 20022 can be only a good thing, as we're seeing over the next couple of years in the payment space, and as that flows through into the different business lines that are supported by the ISO messaging standards. So I think it's a very, very key part of adding automation to the event lifecycle or to the operations lifecycle of trade lifecycle support, but it is going to be phased in the different areas, as I said, in settlements, in payments, in corporate action processing and the like. But a very interesting topic nevertheless.
All right, great. Thanks, Alan. I've got a question that's directed to Stacy. I think you addressed this a little bit, but maybe you could just answer this person in a little more detail. Basically, going forward, is remote working going to be, I guess, the main pattern? Is this here to stay?
Yeah, thanks, Jem. It's actually a really difficult question because things are changing still every day and every minute. You see some countries, re-emerging, having second waves and, government reacting on, what does that mean? I think when it comes to city and the private bank, we look at it in a few aspects. Number one, the safety of our colleagues and our clients remain the most important thing for us. And so that's the number one thing as we think about return to site, as we think about, client engagement. However, I think that, working remotely definitely is going to be one of the collaborative way for us to go moving forward. However, I do want to emphasize that we all cherish that physical contact as well. So I think as we open up and reopen, the various societies, across, we will have that mix of both, and it will be a balance and an integration that I see. There are two more aspects that I find, as we continue to work remotely, will be one, the way we attract talent. I actually think that this is an opportunity for us to think about how we can attract talent differently. And then the last thing, obviously, with a lot less commute from one place to another, especially for some of our markets in Asia that has very long commutes, we are going to be more environmentally responsible as well. And so I see that there are a lot of wins in terms of continuing the way that we work remotely as we move into this new normal together.
Okay, great. Thank you. I'm getting a couple of questions around themes around digital assets and blockchain. Olivier, there's one toward you in terms of understanding in the past, I guess so far in calendar year 2020, are you moving resources more towards digital asset, custody or blockchain related projects, or moving more away from that area?
We still remain very bullish on the opportunities created by digital asset and asset tokenization in general. So we continue to invest time and effort, but the approach we've taken at Nomura is to really work in partnership with fintech, especially when it comes to more specialized aspects of a value chain in digital assets. So, for example, custody, where the ability to develop a technical solution to safekeep digital asset is of utmost importance. And for us, there was no doubt that working in partnership with fintech, while specializing in that was the right approach, and where we can bring more the thought process of a traditional financial service institution when it comes to regulation, when it comes to KYC, AML, whereas the fintech with whom we partner are providing the technical knowledge and the technical edge. And so for us, we started on the custody side. We are also launching or have launched a new project around the STO side, so security token offering, and starting to progress towards all the different steps of the value chain, whether it is on the trading side and the secondary aspect of digital assets. So no doubt for us that, as you see also in the press, central banks starting to think about central bank supported digital currency, or the second white paper of Libra, with addressing a lot of regulatory concern. I think we'll see more and more digital asset becoming a ever increasing hot topic in 2020 and beyond. So first, yes, we do move more asset towards supporting that and positioning Nomura as one of the key players in that newly emerging asset class for sure.
Okay, great. And obviously, I guess, yes, we're seeing more on CBDCs. Certainly, China has already launched its test pilot for its DCEP. And it's a very fascinating space. I have a question for SmartStream. For your outsourced services, this is coming from someone from a bank. Can you give some concrete examples, Alan, of how AI has helped mitigate risks and any ops processes that have been affected by COVID particularly? So maybe you can talk about AI mitigating risk specific to the past couple of months.
Absolutely. I think one of the areas we've been working very intensively over the last 12, 18 months, I guess, working with clients going into production with a number of different elements that introduce AI into the operational processing of different elements is reconciliation. We have seen a lot of success stories with the adoption of AI, the utilization of AI within that process, which is traditionally the reconciliation of big data sets, be they transaction data, be that inter-system reconciliations, be that Nostro reconciliations, across the board. The approach that we've taken and the benefits that clients are utilizing or experiencing from the adoption of AI is, for example, where we've applied the AI technology into the reconciliation lifecycle. It's not just looking at the bigger picture and then throwing AI at a reconciliation. It's looking at the data sets. It's looking at the quality of the data. It's looking at the information that's flowing through that particular process and seeing where AI can absolutely bring benefits in. We've got a large international top-tier client that's reduced the exceptions and manual processing on the enrichment of data. They've eliminated 50% of the manual touch points associated to the process before the adoption of AI, just simply enriching the data before it flows into the matching engine based on machine learning and the rules that are continuously enhancing themselves based on the data that flows through that organization or through that process. Truly benefits the amount of time it's taken to resolve exceptions, the amount of exceptions that actually have to be managed manually. And as we walk through the different life cycle points of a reconciliation process, for example, we can see that AI plays benefits in terms of the matching rule configuration, the matching rules that can bring data together, by, again, reducing the amount of time and manual effort to run through those checkpoints and identify appropriate matches for, again, potentially erroneous or not correct data sets that are being loaded into the matching engine. There's many different areas that we're looking at in terms of enrichment of data, the correlation of data, unsupervised and supervised machine learning, all benefit in different areas of a single operational process flow.
Okay, great. Thank you very much. What I want to do is we have more questions coming in, which is terrific. We will get to them. But first, I would like to ask another poll to our audience. So I'm going to push onto your screen a second question. So please take a few seconds to respond to that. And I hope you can see that. What function will be the focus of your firm, so this is to the audience, your firm's investment in technology. So the operations side, the middle office side, market infrastructure, client engagement. So it's a pretty broad, simple question, but be curious to see what you and the audience, your firms are prioritizing right now. And then we will get back to some of the great questions coming in. So I think that's probably enough. So let's take a look at the answers. So the biggest response, client engagement. So I think this goes back to some of the things that Stacy was talking about, but looking at service, reporting, advisory, personalization. So about 40% have responded with that. And then it's sort of a toss-up between market infrastructure and operations. Less on middle office, maybe just because maybe those things tend to flow into some of the others, maybe a little derivative. But Stacy, client engagement, that's a big thing for you. Maybe you can give us a little comment about what you think of this result.
I'm not surprised at all, actually. I am a little bit caught by surprise on the market infrastructure, because I do think that in general, Asia actually have a pretty, refreshed set of infrastructure versus the other regions just, around the globe. I would have thought that operations will rank a little bit higher. But having said that, on the client engagement side, I think that, we've always done very well on, servicing and reporting. And I think that the step up will be on the advisory and the personalization, especially in the space of private bank. If you look, we're not like Amazon. So, you wouldn't have, if you like this product, you can go and get that product. However, I do think that, we are going to move much more towards personalization, just like my panelists have talked about using the data to actually help predict some of these as well. So that's very exciting.
Okay, great. Thanks. I've got a very good question here. It's a little bit hard. So hands up who wants a hard question. What do you think will be the biggest unexpected change in the way that banking is consumed post-COVID, and who will win and lose from that? So I think what the questioner is trying to get at, this is coming from somebody who's an investor. We know that there's been this massive move to digitalization. It may not be perfect, but we know this is happening. We're experiencing it. What's been the biggest surprise, I guess, in terms of the way that banking and financial services are going to go about business as we either move through COVID or after COVID disappears? Larissa, would you like to take that on?
I can have a stab. I mean, I would say the one thing that I've found quite surprising is how quickly we've all adapted. We went very quickly to working from home, and so that to me has been, I wouldn't say it's been easy or it's been seamless and without issue, but by and large, again, to think that globally, all of these financial institutions have been able to keep up their engagement with clients, keep business running, especially in the backdrop of all that market volatility that we saw for a prolonged period. That's been the biggest surprise from where I sit in at the moment.
Yeah. And what do you think this means going longer term in terms of, I guess, the value of the bankers themselves, whether it's a relationship manager on the private bank side or an M&A banker or a rainmaker at a firm? What's going to be the balance between all of this automation that's coming in, the lack of face-to-face and using new tools, and the influence and the value that people bring at these senior roles, which traditionally have been, it's the same for a lot of salespeople. It's traditionally these have always been face-to-face kind of roles.
Yeah, look, I think there's two schools of thought, and I personally think it's a bit too early to make a decision on that. But there's one school of thought. If you think about traditional IBD and the roadshows that they did, and it's all being done over Zoom, WebEx, On24 across all the firms. You think about client engagement for PWM clients or the traditional global markets. It's all being done virtually. So there's a school of thought that travel will decrease significantly, and a lot more things will be done over webinars, both internally within the firm or externally. And then there's the other school of thought where, as and when things, if they do go back to normal and travel resumes, maybe things will just go back to the way they were. And, if one particular, company starts doing all the travel and face-to-face with clients, others will jump in and it will just resume to as it was. So I personally think it could just be a fine balance between the two, and really what the clients demand is what we will need to deliver.
Right. Yeah. Okay. Thank you for that. I've got a question. This one is a little bit of inside baseball, so I'm going to rephrase the question a little bit. But Stacy, maybe you could talk a little bit about if you are involved in any blockchain-based settlement methods, and if this is if your priority level for these projects is changed.
Thank you for that, Jem. Not within the private bank space at the moment. However, our partners on the market side, with the capital markets space, we have been exploring, as well as on our transaction services business as well, and that's been well published, across the globe also. This will continue to be our focus and priority as we, explore and expand on our technology. So absolutely, this does not change at all as a result of COVID. Jem, I do want to sort of talk a little bit about the unexpected. I think, I agree with Larissa on just, how quickly and adaptable that the clients have been as well as the colleagues. But I'm a little bit biased because I think, companies like Citi or even Goldman were so well placed because while we've always been big and very scalable, we thought we also moved slow. And I think in this period, we were proven to be able to be fast in, answering to what needs to happen, whether that's working from home or some of our regulators wanting to, allow relief packages and programs. And we were able to produce those, arrangements to our clients very quickly. So I really, second what Larissa is saying. It really depends on what the clients want, and I do think that the clients will have both now that they know that both are, readily available.
Yeah. How does that change the relationship that you might have with, say, the fintech world? In private banking, whether there's wealth tech companies or companies helping you with a variety of things that you need on the security verification and so on. If banks are a little more nimble than perhaps they've been given credit for, at least when push comes to shove, do you think this will change the relationship or the balance that you have with fintechs that are either helping you in a B2B way or trying to compete with you?
I think there will be more partnership, is my humble opinion. I think that, we have that platform, we have that scale. They have very niche, offerings that are really going to add to our clients. And so I believe that partnership will actually, widen up in my observation.
Okay, so this is creating more space. It's going to be easier because one of the big complaints that fintechs and, to be fair, banks have also had around these relationships is that it's just very slow, right? I mean, the POCs can take a long time. There's so many hoops. It can take literally years for a fintech to be onboarded in a partnership, and then before they know it, they've run out of cash and so on. So do you think that this will, I guess from your statement, it implies that situation might become less problematic?
I think that with the last, couple of months, one of the things that I've observed is the flexibility in our functions partners as they evaluate through, a risk. We didn't get to cover a lot of the risk elements here in the last sort of 45 minutes, but one of the things that we were able to do, and going back to being adaptable, was balancing still observe the risks that we need to make sure that, and the controls that needs to be in place while we have these kind of partnerships. So I definitely think so. I think that people have now really opened up in accepting that partnership and still get to that speed to market. So I'm very optimistic and hopeful.
Okay, good. Question for Olivier. Do you think that central clearing has improved the resiliency of markets? And where do you think central clearing houses and central counterparties should be focusing now? Is that something you can answer?
Yeah, I think they did. I don't necessarily have a full picture on this one, but I think they definitely did improve the resiliency of the market. Where can they improve going forward? I think it's increasingly thinking about how they use data to support the participant on the different exchanges, and thinking about the information that they have and how they can either kind of monetize that or do partnership with different parties using the infrastructure, so that everybody is becoming either more resilient or more focused towards very quickly answering client needs. So I think some of that sometimes is not yet fully in place when it comes to dealing with exchanges, where the access to your own data is sometimes a bit cumbersome. And the more you make this a bit more efficient in terms of ownership of data or ownership of information, I think then create more efficiencies in the market, and you'll be able to react much faster to especially volatilities that we've seen in the past couple of months.
Yeah. Do you think this will lead to sort of virtual-only services and will that have an impact on the pricing that firms can bring to bear? Will there be a discount for things that are just online?
I'm not sure it should be. I mean, if it's just online, you have access to it faster. You have the access to the information faster. If it's physical or kind of it requires more manual processes to get access to it, I actually think there should be a discount on this one. So, I'm not sure answering your question well, but I think everything that is online, accessible faster, where the information is much more efficient, and those are, in general, everything that is pure online, where the data layer, the data accessibility has been thought from day one, I think will be a premium for that.
Yeah. We have a question that mentioned that Stacy brought up the issue around risks. And maybe we could, and she talked a little bit about that. Maybe Larissa, would you be willing to share where are the new risks now? What's changing that you're keeping an eye on, and how are you making sure that you don't get caught by surprise?
I think I was thinking around, the topic around, how we've navigated through this, and it goes back to a lot of these structures were in place post 2008 within our firm around, being able to deal with, such huge shifts in the market and such shocks. And so over the past few years, especially as I think about in engineering and operations, we had most of the framework to manage these risks. We had most of the right people in the right spots. Everyone knew who's accountable for what. In terms of, managing the huge volumes, the huge volatility, and where all those risks were lying. What we did change was, the frequency of the monitoring, whether it was the system stabilities, the start of day checks, doing checkouts on the weekends. We slowed down and put a lot more scrutiny around any new code release. In operations, they had a lot more senior managers with their eyes on where the exceptions were, where were the breaks, where was the risk. They were doing daily triaging across where teams were constrained and moving resources. And so, probably not the answer that whoever asked, but I feel that, personally speaking from our firm, we were in an excellent position to actually to deal with these additional risks as a result of, the entire situation.
Okay, thanks. We're getting close to, we've only got a few minutes left. I've got one last poll, which I'd like to get out to you guys, and we'll run this very quickly. And so please take a look. So I wanted to ask, I've been talking to some of the speakers earlier around how they work with partnerships and outsourcing. And we had some questions as well around this. So I wanted to ask, when it comes to outsourcing for you firms, for the firms of you in the audience, is outsourcing something that you were considering prior to COVID? Is it now become something that you're looking at? Is it still very limited, or is it not really something that you're focused on? So just let us know. And while you're doing that, I'm going to also just, as a courtesy to Laurence at ASIFMA, she had mentioned a few of their events coming up. So I hope you can see that. 2 events, so put those on your calendar. And let's go to the poll results. So many people have been looking at outsourcing, although it is limited in what they're looking to do. So Alan, very quickly, we just have a few minutes left. Any feedback on what you think about this? Sorry, can you see the screen, Alan?
Yes, I can. Sorry, I was stuck on mute. Yeah, just taking in. With regards to the outsourcing, I think it's looking at the challenge that the organisation is faced at the moment. It's the upping their operations and everybody adopting the new normal in terms of working from home, working remotely, as was just mentioned in terms of additional controls, checks and balances around the process in this new operational environment. I mean, I guess the benefits of some of the operational processes that can be outsourced are not only the fact that it's processing as it would currently or as it was previously in the outsourced environment, so you haven't got to worry about it. You're offsetting the requirement to the service provider for the outsourcing, and you're outsourcing to the experts in that particular solution, in that particular function, to deliver a particular service on the particular part of the operation, part of the function, part of the business that you've outsourced. I think it's going to be interesting times as we move forward and come out of this pandemic situation to see what the thought process is of different organizations in terms of looking at how they were operating previously, how they managed their journey through the pandemic, and how they've come out of the other side. I think is going to shape and form a lot of decisions on how they set the strategy going forward.
Thanks. In the last minutes that we've got, I have kind of a very broad question that I'd like to use to kind of sum up what I think has been sort of a big question about this whole thing, which is resilience versus efficiency. And we've talked about this in different ways in the past hour, but maybe Stacy, can you give me a quick rundown on has the balance shifted between these two needs?
I actually think that it's 1 + 1 = 3 now, because we have to operate, efficiently with the level of resiliency so that, at any point in time, our clients are being served. And I think that we were able to see that during, this unbelievable pandemic. And so I am looking forward to continuing to see that multiple as we achieve the efficiencies, not at the expense of resilience, but, to be able to maintain both of them in tandem.
Okay. And Larissa, what's your take on this? Resiliency versus efficiency. Is the pendulum moving one way or the other?
No, unfortunately, I agree. Boring answer, but, they go hand in hand. Whether it's, if something's resilient, it needs to be efficient. And so I think that we're only going to be focused more and more on both of those components as we move forward.
And last question for Olivier on this theme. What will be the competitive advantage? You're more on the innovation side. What do you think will mark the advantage for firms in the next year?
I think it's remaining on your ability to manage your internal and external data estate, so that you try to generate alpha and move faster than some of the competitors who haven't invested enough into it. And I'll be slightly more in the camp of efficiency. I think the structural challenges of the industry have not disappeared. Margin remain extremely compressed and tight, even more so with greater electronification. So I think you need to have your balance of investment maybe slightly tilted towards the efficiency, which I include in terms of both revenue capture and obviously cost control, but being extremely agile in terms of managing your data and generating revenue from it is going to be a key competitive advantage, I think, for firms going forward.
Great. Look, we're about at the end of our time, so I would like to thank, first of all, our panelists for joining us and taking time out of their, as you can hear, very busy days to share what's going on with us. So please, thanks to Larissa Dudley, Stacy Lacey, Olivier Dong, and Alan Jones. And of course, I'd like to thank you, our audience, for registering, signing up, all the great questions you've sent to us. There's a few I didn't get to, but we just have run out of time, so apologies for that. But I hope you found this enlightening and you got some good insight into what's happening in the operations and technology area here in Asia. So for DigFin, I'm James DiBiasio. Thank you, and see you next time.